Everyone screams, tax the rich. But here's the problem. The rich don't pay. They use buy, borrow, die. They borrow tax-free cash against their inflated assets, live in luxury, and never sell a single share. Ordinary people pay taxes on every paycheck. They don't. So forget taxing the rich. Tax the dead instead. When you die, the game ends. No more step up in basis. Your heirs inherit, but the country collects on decades of untaxed gains. When dynastic fortunes pass tax-free, while the rest of us live paycheck to paycheck, that's not capitalism. That's feudalism. Tax the dead. It's the only way to restore fairness without choking off growth. That's the fastest version. Now, let's slow down and unpack why taxing the dead is a smarter, fairer system, and why it might be the only way to close the gap between dynastic wealth and everyday workers. First, let's be honest about the slogan, tax the rich. Sure, sounds good, but in practice, it doesn't work. The ultra-wealthy have already figured out how not to pay. They use buy, borrow, die. It's a strategy. Instead of selling appreciated assets, which would trigger capital gains taxes, they simply borrow against them. Loans aren't income, so they're tax-free. They live in luxury, tax-free, while ordinary workers pay taxes on every paycheck. The system is tilted before the conversation even begins. This brings us to the ultimate loophole, the step-up in basis. When heirs inherit assets, the tax value resets to the current market price. This means decades of untaxed gains from the moment the asset was purchased until the owner's death simply vanish. The effect is staggering. Fortunes pass nearly tax-free, creating a hereditary elite. Ordinary families pay taxes every year, but billionaire heirs inherit empires untouched. That's not just inequality, that's feudalism in disguise. So, what's the alternative? Tax the dead. This approach is profoundly pro-growth and business-friendly. It keeps taxes low during the life of the investor, allowing entrepreneurs and investors to grow and reinvest without punitive rates. But at death, the assets face taxation. The narrative is simple. You can borrow all you want while alive, but when you die, the tax bill comes due. The revenue potential is enormous. Properly enforced estate taxes could generate hundreds of billions annually, without raising income taxes on the workers who need relief most. To make tax the dead work, we have to kill the loopholes. Here are the mechanics. Eliminate the step-up. Tax unrealized gains at death instead of resetting the value. This ensures the gains are taxed once, like normal income. Progressive floor. Apply higher estate tax rates only to estates above a generous threshold, so small family inheritances are never hit. Closed trust. Aggressively tighten rules around complex trusts and offshore shelters that wealthy families use to hide assets from estate taxes. Require transparency. Mandate disclosure of all large estate transfers to prevent hidden dynastic pipelines. Finally, let's talk about the bigger picture. Tax the dead reframes the entire debate. It's not about punishing success. It's about preventing dynastic wealth from escaping taxation entirely and rebuilding trust in the system. Ordinary people see fairness restored when the heirs of billionaires finally pay. It's a way to reinforce the social contract without choking off growth. Taxing the rich sounds good, but they've already figured out how not to pay. Taxing the dead is harder to escape. It keeps taxes low while people build wealth, but ensures dynastic fortunes don't pass tax-free. If we want capitalism instead of feudalism, the answer isn't tax the rich. The answer is tax the dead.